Hey traders, it's John Fortune here with this week's Weekly Forex Forecast for the 5th of August to the 9th of August 2019. As always, we're going to start off by looking at the US dollar index and oil before running through a number of markets, looking at the key levels of support and resistance in the process. I'm also going to highlight some of the targets that we're going to be looking for in the coming week and also for the weeks ahead. So I hope you're having a nice weekend, everyone. Let's jump over to the charts and see where the money is this week. As always, we're going to start off by looking at the US dollar index. Just before we do that, just to remind you all, there is next week 2 interest rate decisions coming out of Australia and New Zealand on Tuesday morning and Wednesday morning. And there is expected to be a rate cut out of New Zealand next Wednesday morning as well. So just keep that in mind, as the Australian and New Zealand pairs are likely to get volatile around those times on Tuesday and Wednesday morning. Now, in terms of the US dollar index, last week we actually had a rate cut out of the US. However, the price action did not reflect that cut. Instead of having a depreciation in the US dollar, as you would expect on a rate cut, we actually had the US dollar moving to the upside. We had an appreciation of the US dollar. And this just goes to show something that we talk about with members, which is that you have to follow the price action, because news will not always produce the exact movement you're expecting at all times. And it can actually do the opposite of what you would expect it to do. So on that basis, very simply put, we are still structured to the upside this week in the US dollar index. As a result, if we can get a pullback, and as always, preferably if we can get a pullback all the way to retest broken resistance, turning support at 97.39, any pullback in this area is going to give us an opportunity to start to look for bullish formations and patterns. And we're going to be looking at further advances to the upside in the US dollar index, up towards the next key of resistance at the 99.37. So again, just to point out that we did still come and take out the target to the upside in the dollar index despite that rate cut. So bear this price action in mind when going into next week and trading New Zealand pairs with an expected rate cut next week. You can see that this is possible. You can actually see a bullish reaction to a rate cut despite rate cuts being inflationary. So the next market we're going to look at is crude oil. Now, last week we were looking for further declines to the downside, and we did come and take out the target set from last week at 54.76. So very simply put, going into this week, we're still structured to the downside. We're still looking for further declines to the downside in crude oil. If we can get a pullback, and as always, preferably a retest of broken support, turning resistance at the 57.28, this is going to be the preferable place next week to start to look once again for those bearish formations and patterns. And we're going to be looking at initiating shorts down towards the next key of support to the downside of the target set, the 52.95. And if we can get a break through here, we're going to be looking down towards the next key of support to the downside and target 2, the 50.42. So next market we're going to look at is euro dollar. Now, last week we were looking further declines to the downside in euro dollar. You can see we came down and we just missed the target set from last week by a few pips down here at the 1.10220. So very simply put, going into this week, we are still looking for further declines to the downside. We're still structured to the downside in euro dollars. So we have no reason to look for anything other than shorts in euro dollar next week. If we can get a pullback, and preferably if we can get a pullback and retest broken support from the past, turning resistance at the 1.1150, this is going to be a great place next week for anybody not short from last week to start to look once again for those bearish formations and patterns. And we're going to be looking at initiating shorts down towards the target set from last week in the next key of support to the downside of 1.1022. And if we can get a break through here, we're going to be looking down towards the next key of support to the downside and target 2 at the 1.0952. So the next market we're going to look at is pound dollar. Now, last week we were looking for further declines to the downside in pound dollar, and we smashed through both targets last week. We had a really big sell-off in the pound dollar last week, taking out both of those targets to the downside. So very simply put, going into this week, we're structured to the downside still, so we're only going to be looking for shorts in pound dollar going into next week. If we can get a pullback, and preferably if we can come back and test broken support from the past, turning resistance to the 1.23760, this is going to be the best place to start to look for those bearish formations and patterns. And if we get the right kind of bearish formations and patterns in this area, we're going to be looking at initiating shorts down towards the next key of support to the downside of the target set at the 1.1990. And if we get a break through here, we're going to be looking down towards the next key of support to the downside and target 2, the 1.1905. Because these targets are quite close together, it may be difficult to actually trade in between them, so you could just consider this as a more conservative target and a more aggressive target going into next week. So next market we're going to look at is US dollar Japanese yen. Now just quickly, last week some of you pointed out there was no US dollar Japanese yen last week. Apologies for that. It was just simply an upload error. I did do the video, but for some reason it didn't upload into the full forecast. So apologies for that, but we do have it here this week and we'll have it in future weeks as well. Very simply put, in the US dollar yen this week, we're looking further declines to the downside after that hefty sell-off when the tariffs were announced out of the US. We are looking further declines, but what we'd like to see first is a correction. If we can get a pullback into this area, and preferably as always, if we can come back and retest broken support, turning resistance to the 108.370, this would be a fantastic place to start to look for those shorts, as we'd have very good risk to reward down towards the target. So if we do get this kind of price action, very simply put, we're going to be looking for bearish formations and patterns to the downside in the US dollar yen next week. And if we get the right kind of bearish formations and patterns in this market, we're going to be looking at initiating shorts down towards the next key of support to the downside and the target set at the 106.10. And if we can get a breakthrough here, we're going to be looking down towards the next key of support to the downside and target 2 at the 105.61. Again, you will notice these are very close together, these support levels here. So instead of trading between them, as there may not be the space, you can once again just consider this as a conservative target next week, and you can consider this as a more aggressive target next week. So next market we're going to look at is Aussie dollar. Now last week looking further declines to the downside, and we did take out both targets to the downside set from last week. Very simply put, we're still looking further declines to the downside. In fact, the Australian dollar is fundamentally very weak, and this is in line with the overall fundamentals of the Australian economy at the moment. So further declines to the downside are the opportunities we'll be looking for next week. If we can get a pullback, and as always, if we can get a pullback and a retest of broken support, turning resistance 0.6905, this would be preferable, as this would give us much better risk to reward. You can see we're coming close towards the target already. So any pullback in this area, we're going to start to look for bearish formations and patterns. And we're going to be looking at initiating shorts down towards the next key area of support to the downside and the target set at 0.6745. And if we get a breakthrough here, or instead of pulling back here, if we just come and break straight through like this, this will be another great chance to start to look for further declines to the downside, down towards the next key area of support to the downside and target 2, the 0.6604. So next market we're going to look at is New Zealand dollar. Now we start the week beneath a key area of broken support, looking to turn resistance at 0.66280. If we can get a pullback, and we need a pullback because like the Aussie dollar, we're quite close to the next key area of support. So to get good risk to reward, if we can get a pullback, and as always, preferably if we can get a retest of broken support, turning resistance, this is going to be a great place next week to start to look for those bearish formations and patterns. And we're going to be looking at initiating shorts down towards the next key area of support to the downside and target set, the 0.6488. And if we can get a breakthrough here, we're going to be looking down towards the next key area of support to the downside and target 2 at 0.6427. Now, once again, just remember the New Zealand dollar, as with the Aussie dollar, which we just looked at previously, both have interest rate decisions next week on Tuesday morning and Wednesday morning. So next market we're going to look at is US dollar franc. Now last week we came very close towards the target set at the 1.0000. We declined to the downside when those tariffs were announced. Now, very simply put, going into next week, we are still looking further advances to the upside in US dollar Swiss franc. We're still structured to the upside despite this very big sell-off here at the end of last week. Very simply put, we're coming up to an area of support now where we're going to start to look for bullish formations and patterns. Because of how sharp this sell-off is, and because we're quite close to the lows down here, we will need to see bullish reversal patterns taking place if we're going to get involved in this. We will not just buy this level because this would be too risky going into next week. We really need to see after this sell-off some tradable bullish patterns forming in this area. And if we get the right kind of bullish formations and patterns in this area, we're going to be looking at initiating longs up towards the next key area of resistance to the upside and the target set at the 1.0000. So next market we're going to look at is US dollar CAD. Now, last week, these charts do not come any better than we had US dollar CAD last week. We highlighted the 1.31050 for you. We tagged that almost to the point. And we had our target set at the 1.3237, which was roughly about here. And you can see we had this pullback and we moved straight into the target, and we had a sell-off as profit taking came in from this target last week. So very simply put, going into next week, we are still looking for further advances to the upside. If we can get a pullback, and for those of you who like your trend lines, you can see we're starting to channel to the upside somewhat. But if we can get a pullback, and we don't use trend lines personally, because preferably if we can come back and retest the 1.31050, this would be fantastic as we get better risk to reward to the upside. But if we can get a pullback and a retest of the 1.31050, this would be the preferable place to start to look for those bullish formations and patterns. And we're going to be looking at initiating longs up towards the next key area of resistance to the upside of the target set at 1.3355. Last but not least, we have gold. Now, last week we were looking for further advances to the upside in gold. We highlighted the 140774 as an area to start to look for a bounce to the upside. We did get a pullback and a bounce from this area, and we are making our way up towards the target set at the 1480.30. So very simply put, although we're looking for a strong dollar next week, this is still structured to the upside. We're still looking for further advances to the upside in gold. If we can get a pullback, and for anybody not involved from last week, if we can get a pullback and a retest, that would be great as we get even better risk to reward up towards the target, the 1407.74. But any pullback in this area is going to provide everyone with another chance to start to look for those bullish formations and patterns. And we're going to be looking at initiating longs up towards the next key area of resistance to the upside of the target set at the 1480.30. Now, because we're looking to the upside in gold, this will be one next week that we'll keep our eye on, where if we fail or we start to see a depreciation in the US dollar next week instead of further declines, or we get a bit of a pullback first, this is one of the charts we'll be looking at to capture that dollar depreciation in this up move here in gold. So that is it from me for this week, guys. As always, I hope you enjoyed this video, and if you did, please let me know by liking, sharing and subscribing. A big thank you to everyone who does that on a regular basis, and a big thank you to everyone who has subscribed to the channel so far. I want to wish you all a fantastic weekend, and I hope you all have a profitable week next week. The only thing left for me to say is take care and don't forget to trade safely.